The year got off to a flying start with the global equity markets delivering the best January since 1987. Last year also got off to a flying start following the introduction of US tax cuts, but that sugar high didn't last, and 3 weeks in the market corrected 10%. This time the rally lasted as markets fought their way back from a dismal last quarter of 2018. Almost half of S&P 500 companies reported fourth quarter earnings in January, with those companies that reported delivering 15% earnings growth. The US Central Bank didn't hike rates at their January meeting in line with expectations, and investors welcomed the tone coming out of that meeting, which acknowledged risks to economic growth and dropped their commitment to continuing hiking rates, suggesting that we're now on a more neutral path. January delivered some de-escalation in geopolitical tensions, with indications that trade talks between the US and China were progressing well. President Trump also backed down, albeit temporarily, on his demands for US government funding for a wall on the Mexican border. This allowed 800,000 US government workers and 1.2 million government contractors to return to working and being paid as the US government reopened after a 35-day standoff. In the UK, Brexit negotiations continued to deliver much drama and little progress, with opinions still widely divided on the end state, 2.5 years after the country voted to leave the EU. Emerging markets were a key beneficiary of fading recession fears and lower interest rates as major EM currencies and equity markets rallied strongly, outperforming their developed market peers. Oil also bounced hard, rallying 15% to get comfortably back above $60 per barrel. If you have any questions on this or to invest with Anchor, please contact us on sales@anchorcapital.coza or visit our website www.anchorcapital.coza.